All right, traders. So in this video, I want to talk about how do you identify the end of a trend and how do you forecast that the trend now is about to reverse. This is very helpful for the people who like to follow the trend. So if you're using a trend line or if you're using a dynamic support like a 20-day moving average, 50-day moving average, so this video is for you. Before I get started, make sure you have joined our stock market WhatsApp group. And if you're serious about trading, make sure you enroll in our technical analysis mentorship program. So the details can be found out on our Instagram page or website. So without further ado, let's get started. So as I said, this video is very important for the people who like to trail the trend. And so if you're in the market for a while, you know that the stock market clings to a moving average like a 20-day moving average or a 50-day moving average. And traders like me, I love to trail these averages. I like to go along with these averages. But the question is, how long can you go with the average? So let's take the example of RBL Bank. I've traded a lot over this week in RBL Bank, and this is the chart of 4th of June. So let's have a look at what's happening. So I put the 20 period moving average on the 5-minute charts, and we can see that the price of RBL Bank keeps on trailing the 20-day moving average. So it touches the line, acts as resistance and falls down, touches again, resistance and falls down, etc. So this is what I call trailing the average, moving along with the average and keep on shorting at these points because the market structure is down. So what is the time that you realize that the trend is about to end? What I mean is that how long can you keep on shorting at the moving average? So there's a very simple way that I have devised. So if you see, the first, the support breaks down, acts as resistance. So if you see at this point, there's a high volume of selling because this is the first time the resistance has been tested. So this is the point where you have to short, get the profit. The next time you move closer to the moving average, there will be a relative lesser strength of the sellers. Here we have had a very large seller strength, and when we keep on moving ahead, there'll be a little bit less strength by the sellers to push the price down. And as we keep on going further down the moving average, the seller strength will keep on decreasing. So the way I do things is that when the price starts to stick to the moving average, that is the moment I realize that the trend is about to reverse. So what is the reason is that if you compare this movement when the price touched the moving average around this time, it fell down tremendously. Even at this price, it fell down tremendously. But when we came close to the end of day, maybe in the 130 session, the sellers could not drive the price down, but there was such a low selling pressure. So if you check the volume, the selling volume has drastically fallen, number one. So they are not able to push the price down further because it's already fallen from 134 to 122. It's like the price is already exhausted. So you can no longer trail the average and the price sticks to the average. So this is an indication to me that I have to start booking my positions. So let us say that I have shorted about 100 positions of RBL Bank at this point. So if I come to this level around 132, I'll probably exit 50 of them. One way is that you can exit the entire 100. The other way is that you can leave some room, exit 50, so that 50 is at a good profit and the next 50 can be at a little bit less profit if the trend reverses. And you can see after this movement, the trend reverses and sticks to the average as a support. So I want to show you this example, with a couple of different charts so you can get the hang of it. So this is a chart of Nifty 50 again on the 5-minute chart. I love to trail the average on a 5-minute chart. That gives me the most momentum. This is also around the 5th, and we can see that this price, the moving average, the 20 moving average acts as a very important support. And when we start, so at this point it was a resistance, and when we cross the average, it becomes a support. So to start with, there's a lot of buying volume happening because this is the first time we are testing it as support. And when we come to the next point, we see another hammer, another big buying opportunity. We again trail the average. We again trail the average. there is still a significant buying that's happening. But what happens later is we start trailing the average. So rather than jumping when we hit the average price, the buyers essentially are not able to push the price higher because Nifty has already risen about 100 points. And this point is like an exhaustion zone, when the price is not able to jump but starts to trail the average. And that's the movement I want to book my positions partially or exit completely because the trend then reverses. Let's have another look, about this concept on the charts of Tata Consultancy. Another really easy example. So this is around the 25th of May. The price, as we can see, goes below the average, so this average becomes a resistance, and the first time it tests price drastically falls down because sellers are very active. They're pushing the price down. Another selling momentum came at this point, another momentum came at this point. But when we came to the end, price fell from 2023 all the way down to 1931. That was a big 100 rupee fall. So when we come down 100 rupees, it's obvious that sellers will try to cool off and they will try to exchange hands with the buyers. And that is why when I again come to my moving average, price is not able to fall drastically down. It starts to trail the average. We can check with this volume that the selling volume has reduced. The sellers are not so active as they were when the price was just started to touch the resistance. Now the price has cooled off, so this is the time we know the trend will be reversing. So you want to start booking your positions partially or exit completely. That's totally up to you. And then we can see after this point when the buying pressure comes in, this area becomes my support, and we can then continue to trail the support. So try to use this, if you're the trend following guy, try to use it in your analysis and let me know if there are any other variations or any other techniques that you like to combine in this strategy to, signal a reversal in trend or the end of a trend. I hope you like this video. Do like, subscribe, and share this video, and I'll see you next time. Thank you.